Hello, this is study time, preparation for the General Lines Life Accident and Health Insurance License. We're gonna be talking like really short about life insurance provisions, options, and riders. Required provisions, insuring clause, or insuring agreement. This is the important one. The insurer basic promise to pay the benefits. So remember that you have on the contract, you have like that, like you have the consideration, that you have the offers and acceptance, you have all of that. So you have the promises. The promises to pay the benefits to the person in event of a loss. The insurance clause is the part of the life insurance that identifies the specific benefits and services that are going to be covered and the circumstance under which will be paid. Any promises that insurance makes will be in the insuring clause, which will be the promising clause. Consideration clause. Policy owner must pay a premium in exchange for an insurer paying benefits. Policy owner consideration consists in completing the application and paying the initial premium. You got to pay the initial premium to have that to start. Entire contract. Overall, the entire contract includes the actual policy and application. No change can be made. If a change is made, you need to put your initials. Nothing can be added additional to that. So that's important that like nothing can be just talk by words or nothing. So as soon as the contract is signed, nothing can be changed. Grace period. The period of time policy owners are allowed to pay an overdue premium during which the policy remains in force, around usually 30 days. If an insured dies during grace period, the insured life insurance policy before paying the initial a required annual premium, the beneficiary will receive the face amount less any required premiums. Grace period is the same definition of your insurance bill as it is for all your bills. Don't pick it as an answer if the question isn't taking about paying your bill late and keeping your insurance. Reinstatement permits the policy owner to reinstate a policy that was lapsed as long as the policy owner can provide proof of insurability and pay all back premiums, outstanding loans, and interest. Most states allow reinstatement up to 3 years, some states 5 to 7. Incontestable clause. The clause in the life insurance contract that prohibits the insurer from questioning the validity of the contract after a certain period of time has elapsed. Incontestable clause. So after around 2 years, you can, like, if it's something is there and is not correct, you cannot cancel the contract. Misstatement of age or sex allows the insurer to adjust the policy benefits if the insured age or sex is misstated. Policy loan provisions. Policies can have cash value, also have policy loan and withdrawal provisions. These policies must begin to build cash value after a certain number of years. In most states, it's 3 years. These loans with interest cannot exceed the guaranteed cash value or the policy is no longer in force. Automatic premium loans allows the insurer to automatically use the policy cash value to pay an overdue premium. So automatic premium loans, if you don't pay it, it's kind of an overdraft. Policy loan provisions. Policies that have cash value also have policy loan and withdraw provisions. So you can just loan from your own policy. Owner's rights provision defines the person who may name and change beneficiaries, change options under the policy, and receives any financial benefits from the policy. So owner's rights is define the person who may name the change beneficiaries. So like what's the like who is we're gonna receive the policy the benefit. Assignment clause and provisions, the right to transfer policy rights to another person. So this is something that might go in the test. So assignment clause or provision. So this is the right to transfer policy rights to another person. Absolute assignment, when the assignee receives full control of the policy and rights to the policy benefits from the current policy owner. Under an absolute assignment, the transfer is complete and irrevocable, and the assignee receives full control of the policy. Collateral assignment. This is like when you're gonna just a partial and temporary transfer of rights. So if you are just need a loan or something and you need a collateral, you can use your own loan as a collateral. Free look. The policy owner is permitted a certain number of days once the policy is delivered to look over the policy and return it for a refund. Notice of claim. Notice of claim provision describes the policy's owner obligation to notify the insurance company of a claim in a reasonable period of time, around 20 days after the occurrence. So when you have a claim, you have around 20 days in order to provide the information to it. Notice of claim, 20 days. You need to let the insurance know that you're going to file a claim, so they are expecting your claim forms. Claim forms. Company is responsible to supply claim form to an insured within 15 days after receiving the notice of claim. So you have 20 days to say that you have a claim, and they have 15 days to give you the forms back. And if they don't receive it, you can send it the way you want. Proof of loss, the statement that insured must give an insurance company to show that a loss is actually occurred in a proof of loss. Time of payment claims. Let me just go back to the proof of loss. After a loss occurs and after the company becomes liable for payments, the claimant has 90 days in which to submit the proof of loss. Insurance company can't pay you if you don't prove that there is a loss. Time of payment of claims. The time of payment of claim provide immediate payment of the claim. So you have 20 days to send it, 15 to receive back, and payments needs to be provided immediately after insurance receives a notification and the proof of loss. If the claim involves disability income payment, it must be paid at least monthly. And the purpose of time of payment claims is to prevent insurance company from delaying claim payments. Payment of claims. The payment of claims provision is the insurance contract that specifies how and to whom claims are going to be paid. Payments for loss of life should be made to the designated beneficiary. If no beneficiary has been named, that proceeds are to be paid to the deceased insured state. Physical exam and autopsy. In some states you don't have, they will be forbidden. Legal actions. Insurance companies, the insureds cannot take legal action against the company in a claim dispute until 60 days from the time the insured submits proof of loss. So you have 60 days. So you again 20 days to say that you had a issue. They have 15 days back to send you a claim. Send you the forms. Payments must be done immediately, but you can just take legal action only after 60 days. At least give the insurance company 2 months to take care of you before you take him to court. beneficiary designation, where the policy indicates where will be the proceeds. Change of beneficiary, you can just make insured as a policy owner may change the beneficiary designation at any time unless the beneficiary has been named irrevocably. Settlement options, where the ways the proceeds will be paid out. Discretionary provision limits the way a court can review a claim denial. Change of occupation, this is important. This provision also allows the insured to reduce the maximum benefit payable under the policy if the insured switches to a more hazardous occupation, or reduce the premium rate charged if the insured changes to a less hazardous occupation. So they can do any of these. So like if you change occupation, they can make changes or in the benefit or in the premium rate. Unpaid premiums, if there is unpaid premiums at the time a claim becomes payable, an amount of the premium to be deducted of the sum of the payable insured or beneficiary. Cancellation, though prohibited in a number of states, the provision cancellation gives the company the right to cancel the policy at any time with 45 written notice to the insured. This notice must also be given when the insurer refuses to renew a policy as well. Conformity to state statutes. Any policy provision that is in conflict with state statutes in that state where insured lives, the policy's issue is automatically amended to conform with minimum statutory requirements. Intoxicants and narcotics will not be paid. And then let's continue with guaranteed insurability option rider. Allows the policy to purchase an additional insurance coverage without proving insurability. Pay a provision about the premium waiver of premiums if the adult premium payer should die. Then we have accidental death benefits. Double indemnity provides an additional amount of insurance, usually equal to face value of the base policy if a cause of death was an accident. So if it's in an accidental death benefit rider, so it's like you pay extra, double or triple if it's an accident. And then we have like several different things about exclusions, things about like suicide clause. If it's over 2 years, they cannot go after you. Waivers of impairments, if an insurance company does not cover a loss due to a specific condition that insurance has, this is called impairment rider. And the policy options, no forfeiture options. Are you closing to your account? What do you want us to do with your cash? This is like what you want to do with the cash. If you want to get out of it, you get the money, you extend term, or you reduce the payout. Dividend options, same thing. Cash option, you want to just do reduce premiums option. Accumulate interest option, paid up additional option, one-turn option. Premium riders, we have several different kinds of premium riders. Waiver of premium, pay your rider, accidental benefit rider, allows the insured to receive a portion of that benefit to the death if the insured has a terminal illness. It's just for you to just get the money just to pay for other stuff. Accidental death benefit rider just pays additional sum if it's an accident. Guaranteed insurability rider, if like you buy an additional permanent life insurance, specific points of life, and you don't need to have proof of insurability. cost of living rider, return of premium rider, and automatic policy loan rider. Allows the insurance company to deduct overdue premium from insured cash value by the end of grace period if a payment is missed on the life policy. And here it is. It was a long chapter, but thanks a lot for joining. Have you enjoyed our content? Insurance Nation is a website a location that I created in order to find some content, in order to help you to pass the insurance, general lines insurance test. If you have enjoyed our content, please join us on YouTube. We'll always be able to just add more content down there. We'll be able to just provide some real examples, go to websites, and at the same time, we want to hear from you. If you want to have any questions or something that you have some questions about the test or something that you'd like for me to place it on this website, please let me know. I will be glad to help you out. Go to Insurance Nation at ideanaso.com and feel free to provide any kind of donation of any size. Thank you, and see you next time.